friends in Vietnam. Good evening, I think. Is that right?
Hi, good afternoon from Ho Chi Minh City here. Hi, Richard, and hi, James. Thanks for having us on the program today.
Thank you. And so I think, as usual, we'll just start with asking you to sort of run a bit through what the fund's trying to do, please, and how you're going about it.
Yeah, thanks for having us on the show. So maybe a bit of a background to VinaCapital and the Vietnam story. We're about 10,000 kilometers away from London at the moment, but our fund is listed in London on the London Stock Exchange today. So the UK and UK investors are very important to us. The VinaCapital, we started 20 years ago with about 10 million under management. Today we have just shy of $4 billion US dollars under management. We've got about 200 investment professionals across several strategies. From public equities, fixed income, private equity, venture capital, and all the way over to real estate and renewable energy. But the fund that we're talking about today, the VinaCapital Vietnam Opportunity Fund, is that the London listed fund that Andy, who's here with me today, and myself, Khanh, we help run. And in terms of the firm, we've been doing this, as I said, for 20 years, and I guess over the years we've been able to form some really strong partnerships with global and international investors. Vietnam has been and remains a very interesting space, but access is difficult. As I said earlier, we're far away, but I think for global institutional investors, it's important to find a trusted partner, and I think that's the same with retail and investors, as well as folks that listen and subscribe to your show. It's important that they understand who is their manager in the country. And I think one of the testaments to our strength is that we partner with very strong global international investors. So, for example, in real estate, we've got partnerships with Warburg Pincus and CV Star. On the energy, we've got EDF Renewables. Logistics, we've just formed a new partnership with AP Moller Capital, which is part of the Maersk shipping company, and that's a focus on logistics, something that you were talking about a little earlier, Richard, around warehousing and whatnot. This is some really interesting investment opportunities here in Vietnam. And then on the venture side, we've had long-standing partnerships with Draper Fisher out of San Francisco, and more recently with several venture investors here in Southeast Asia. So, I thought maybe we could sort of touch on this ESG lens, and I think one of the questions we normally get asked by investors, we are in a frontier market, and we're very aware of that. ESG, governance risk, environmental risks are things that have been part of our consideration and part of our investment process over the years, over many years. And as private equity investors, we actually really do get into the businesses that we invest in. We bring in external ESG consultants to help us with the due diligence. And once we invest, we look to create changes, and through those changes, you create value. We have today, our members of the UNPRI. We subscribe to the performance standards of the IFC. We support the climate change through the Task Force on Climate Change. And I think what's important is that these processes and this due diligence has been part of our investment process for some time now. It's not sort of a new catchphrase that suddenly has caught on. But investing here in Vietnam, in the frontier market, we really do have to do this level of due diligence. I think just to before we get into a discussion around the Vietnam story and why it's such an interesting opportunity, within the firm itself, we've been doing this for 20 years, and a few years into this, we decided to put the money that the firm makes, the partners make, into the foundation, And today, you know, we are probably one of the largest foundations here in Vietnam. We do, you know, our foundation team does some tremendous and amazing work around, you know, giving back to the economy, giving back to the society, around education, around healthcare. And we really encourage, you know, as we talk about the investment opportunities, I think we sometimes forget some of the impact that the firm we make on the community side. So on our website, you know, please have a look at that. Looking at Vietnam, I think it's important to understand that you know, we are a country that is very dynamic, and if you've had a chance to visit Vietnam in recent years, you can attest to, you know, it's a very busy, it's a very exciting place. There's lots of motorcycles around. There's lots of people. You know, we're a country of 100 million people, and if you think about that 100 million people, 65% of that population, the equivalent population of the United Kingdom, I guess, is under 35 years of age. So we're a very young, productive, hardworking society, and it's because of that we're seeing, you know, very strong interest in foreign direct investments. Companies from within the region and globally coming to Vietnam, setting up manufacturing. We have a very, you know, productive workforce, and then as a function of that, you see that you know, the rising middle income. You know, that's a really interesting phenomena. You know, we are, I believe, one of the fastest countries in history to grow out of poverty to middle income, and you know, that has meant that there is a really, you know, interesting dynamic around consumption. And later on in this presentation, we'll talk a bit about the consumption boom, and I think importantly, what are the investment opportunities that this fund and we as managers are finding there. And I think equally important is that the government has a really strong commitment to public spending. Infrastructure development is high on the priority, and that's important because if you're a Foxconn or an Apple or a Lego or an Intel, who are all companies that have set up operations here in Vietnam, when you come here, you want to make sure that you've got a good, educated, productive workforce, but also good infrastructure so that you can bring your parts in and the movement of goods are there. I'm going to briefly, you know, pause there, James. You know, is there any questions you wanted to touch on before we sort of delve into the macro story?
The first questions that are popping up here, one of them is just talking about which sectors you think are the best places to invest at the moment, given what's happening in Vietnam.
Hi, James. This is Andy. Yeah. So what we do every 6 months or so is we look at the potential return on each of the sectors that Bloomberg picks out. I think it's called GICS. Sector list. And then what we do is we look at the potential return, what we call EPS growth for the next 3 years. And we couple that with the risk that we see associated with each of these sectors. From that analysis, we review it every 6 months. We would construct our portfolio in terms of getting a diversified exposure to these sectors. And as you can imagine, the sector that demonstrates the highest risk-adjusted return gets more weight. At the moment, we have a lot of emphasis on real estate. It is a sector that primarily contributes to the millionaires and billionaires you see out of Asia. If you look at Singapore, Hong Kong, and now Vietnam, you see that a lot of millionaires are made out of real estate development and real estate investments. And coupled tightly with real estate is the financial sector, and more specifically, the banking sector. The commercial banking sector is highly correlated with the performance of real estate. And as economies grow, in this case in Vietnam, we're growing about 5 to 7% per annum. Financials would do very, very well. In addition, as Khanh mentioned earlier, we're spending a lot more money on infrastructure development. And that's going to mean materials, construction materials like steel and cement. That sector is actually quite interesting as well. And as some of you may know, we recently tied up or partnered up with AP Moller to focus on logistics investments in Vietnam, from seaports to warehouses, bonded warehouse, wet warehouse, dry warehouse, and trucking movements of goods across domestically across Vietnam. So this space is very hot right now. I think it'll be very strong over the next 3 to 5 years, because Vietnam is becoming more and more of a manufacturing hub as multinationals diversify themselves away from China to produce more and more goods in Vietnam. Folks like Legos, who's building $1 billion carbon neutral plant in Vietnam. Intel produces a lot of their chips in Vietnam. Samsung produces more than 50% of their smartphones in Vietnam now. And all these businesses will need the logistics sector to support the movements of their goods in and around the country and out and exporting these goods. So I hope that gives you a sense of the sectors that we're interested in. But I think in general, it is really the sectors that contribute to the growth of the domestic economy that gets us excited about investing in Vietnam.
Okay. One of the things, the stories that's been running for a while now, is this idea that people are shifting manufacturing out of China and into places like Vietnam. How much of Vietnam's success is down to that?
Yeah, I think you can say that over the last 5 years or so, a big chunk of the gross domestic GDP of Vietnam has been a function of FDI coming to Vietnam, setting up shop, and then producing the goods for export. And so I think it's one of the 3 key pillars now of the economic development of Vietnam. The other pillars are agriculture and services. So manufacturing export is becoming a big component of GDP growth in Vietnam.
And if I could add, James, what's important is that the manufacturing that is maybe coming out of China, or the choice of Vietnam as a manufacturing base, what's important is that they are highly technical. They're becoming increasingly sophisticated manufacturing plants, right? There was a time we were producing, socks and undergarments, sneakers, and they still are a component of export, manufacturing and export. But increasingly, and today, what dominates manufacturing here is the electronics. Samsung, for example, over 50% of their smartphones are made here in Vietnam. Apple, aside from making their AirPods and headphones, are now going to be making the iPads, the MacBooks, and importantly, the Apple Watches, which, if you think about it, is a really complicated and intense manufacturing requirement, because it's such a small form. So, what you're seeing is that the manufacturing that is coming here is of very high quality and very high technical standards.
Does it matter, or are you affected by the sort of tension between the US and China and some of the trade war stuff that's been going on?
We're definitely impacted, and I would like to say that we've been impacted on a more positive side. There are a lot of multinationals are looking to diversify their manufacturing away from Vietnam. And recently, I talked to a lot of my counterparts in the US and Europe in terms of investing flow. There seems to be more emphasis to invest in Asia, but more outside of China, into places like South Korea, Japan, Taiwan, and Southeast Asia. There's a sense of, I hate to say it, but an avoidance to deploy additional capital into China. And I think Vietnam benefits from that. I don't think, to be honest, I don't think it's going to be a long-term sort of movement. I think it's a short-term, but moving a little bit of money out of China is a lot of money for a smaller nation like Vietnam. After all, we are less than 1/10 the size of China. And so if you just give you an example, if you move roughly 5% of manufacturing out of China, it represents 100% growth in terms of manufacturing capability in Vietnam. So in short, the conflict or the trade war, if you will, is benefiting Vietnam.
In the real estate sector, how much of the sort of growth in that is driven by foreign money, or is that like a domestic thing?
Yeah, it's interesting. The real estate sector is driven by, first and foremost, demand. Demand is coming from the domestic side in terms of residential, followed by a lot of manufacturing real estate properties, followed by commercial. The demand then drives the need to make the investments. And then the question is, where does the capital come from? Primarily right now, it's coming from domestic commercial banks. Foreign funds, foreign capital do participate in the development of buildings and residential. But I have to say it's funded predominantly by domestic capital, whether they're domestic banks or investors. Foreigners do participate, but in a much lower scale than domestic investors.
Yeah, and I think to add to that, James, the Vietnam urbanization rate is less than 40%, right? If you look at a market like China, that's over 65%. So there's still a significant gap, for urbanization. What if we were traditionally an agricultural society, now we're becoming a manufacturing society. That means that there is a significant level of movement of people from the countryside into the cities and the surrounding areas, and that creates a tremendous demand for real estate. And if you think about what is being supplied versus what the demand is, our chief economist believes its demand is almost double that of what is being supplied. So there is still a very strong domestic demand for real estate. And likewise, that urbanization creates a demand for other things like education, healthcare. And these are also sectors that we're very much interested in. And actually, if you look into this chart here that you show, you pulled up, James, there are many sectors that are in our portfolio that are not represented in the public markets, right? Things like healthcare, information technology, there aren't that many, if at all, investable opportunities on the public markets. But our strategy allows us to look at private opportunities pre-IPO, and allows us to, I guess, take, overweights, if you will, to certain sectors where we believe there's going to be growth. Coming back to the comment Andy made earlier, sectors that will benefit from the domestic economy and the increase in consumption in the domestic economy.
Within the real estate chunk there, how much of that is residential and how much of it is commercial stuff?
Yeah, we don't have the exact number, but I would say about 60 to 70%. If you compare it with commercial, 60 to 70% is related to residential demand. The commercial demand is primarily in the urban city centers, whereas the residential demand can sprawl out easily into suburban area. And it's also a function of the high-speed rail that's being developed today. As more stations are developed in the outer skirts of the city, the residential development demand is much, much higher than that.
We've seen kind of boom and bust in various markets, including Vietnam, in terms of real estate. Is that something you expect to continue?
Yes, like Khanh said, the demand outstrips the supply of real estate, particularly on the residential side, quite significantly. I think it'll continue. The challenge we have at the moment is obviously the cost of funding in Vietnam, as well as around the world, is high. It's gone up quite a bit, and it's making it harder for real estate developers to make generous profits, and it's slowing down the process. I think when the cost of funding and interest rates come down again, we will see developers come back and obviously develop more residential units. It also allows the end buyers, the end users, to borrow more easily at a lower interest rate. So right now, our challenge is liquidity and interest rates, and liquidity is tight and interest rates high. which has slowed down the real estate market quite a bit.
Okay, thank you. So again, in terms of the sort of little pie chart here, can you explain why you have sort of private equity in the portfolio and what the concept of this public equity in private terms, the PEP thing is? Can you explain exactly how that works, please?
Yeah, happy to do that. I think you can look at VOF as similar to the like a Berkshire Hathaway in the United States. It's a listed asset. Anyone can buy shares, 1 share or 1 million shares, and get exposure to Vietnam. What we do with this capital is we focus primarily on what we call private equity types of investments. And private equity can be in investing in private companies before they go public, or it could also be private investments into companies that are already public. And then what we do is on the private side, for example, we make the investments, we deploy 30, 40, $50 million into these businesses. But the reason it's private equity is because we get to do due diligence. We get to do financial, legal, and ESG due diligence. We get to negotiate downside protections, and we get to participate at the managerial or the board level and help these businesses grow. This is extremely important in a place like Vietnam, a frontier/emerging market, because if you're not able to see under the hood, things can happen, scandals can happen. And as a result of that, you need to be able to do due diligence because you aren't going to be able to sell these assets. They're not liquid assets. We do get into illiquid positions, and we do hope to take them public. And that's what's happened in the pie chart here. We've taken a lot of companies public over the years, and we hold on to them as public investments. That's what you see on the red side. The 70% of our NAV is public equity, but more than 90% of those assets were entered when they were private. And then when you have this group called PEPT, it's really private investments into these public entities. And so what it means is that these companies were already listed, but we were able to negotiate a large investment amount into these companies and have private equity terms. And so, as you can see, our modus operandi is to negotiate large positions, meaningful stakes into these businesses. And in doing so, we look forward to the right to have due diligence, minority protection, and participating at the managerial level with these businesses. And the reason we do that is because we view these businesses, even though they're listed, as being somewhat illiquid. And as a result, the downside protection allows us to exit easier in the future. The ease of exit can be in the form of a drag along. We can partner with other sponsors or other shareholders of the company and what we call a drag along rights. So that means we drag other shareholders to sell 51% or 65% to a strategic buyer, which that means we are able to command a premium for a controlling stake. Or other types of downside protection we ask for is a put option back to the sponsor in case the business is not performing as committed. So these are very important in a place like Vietnam, and that's sort of the modus operandi on our strategy when it comes to investing. We really don't pick stocks in the market. There's plenty of funds out there that gives people exposure to the public equity. It can mostly in the form of ETF. That's the most inexpensive way to access Vietnam's listed equity. But again, you are at the mercy of the liquidity of these assets in the market, and you don't have any sort of rights when it comes to investing singular shares or accumulation of shares on the stock market.